The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, into another day of some action. Although you wouldn't know it if you looked at the S&Ps out here, off less than half a point at 2095 as we speak, but 2 billion shares as we start the show. So volume's not all that bad, light on a Friday. Couldn't push it down, but couldn't push it up. I tried to get it over 2,100 on the S&P cash earlier today and kind of pulled back. Of course, we were as low as 2085 earlier in the day, and everybody's probably going to have to take a weekend to think just how all the news of today is going to affect the market. I suspect that we are in a market that is trending lower, and it will not be one of these where the bottom falls out. It will be one of these where it's drip, drip, drip. I've heard it called sometimes the paper cut market, where it just drip, 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 and the one or the 2 and 3 step, 2 steps forward, 3 steps back, 2 steps forward, 3 steps back, and a little bit of all that. Of course, the big news of the day are the bonds and, of course, the dollar index. The dollar index popped back up right to where we've been talking about, that $96.33 level as we speak. It got to 96.91 earlier in the day for the continuous contract. What we look and see in that, or at least what I see in that, is 2 false breakouts to the bottom that have now been negated. We're going to look into next week to really see what's happening. But what else can you say? Normally, we like to do something right before we go to the news, but I'm going to save it for a little bit later at the bottom of the hour. We've got something special planned for what I normally do here, but we're going to go to news just the same.
That it's all just a little bit of history repeating.
On this day in 1933, the United States went off the gold standard, a monetary system in which currency is backed by gold. When Congress enacted a joint resolution nullifying the right of creditors to demand payment in gold, the United States had been on a gold standard since 1879, except for an embargo on gold exports during World War I. But bank failures during the Great Depression of the 1930s frightened the public into hoarding gold, making the policy untenable. And, of course, it was 1994. Yeah, I think it was 1994 when Gerald Ford, the president at that time, signed it into law where Americans could once again own gold. Now, today, probably not happy if you were owning gold. It was down a little bit today. In fact, what do I have out here? Gold down about $6.70. It's kind of going through a few of these levels that have been acting as support. I wasn't watching it closely today, but a lot of these cross currents in these markets are starting to get tied up. But, got platinum down almost $7. Crude up a little bit. It was down a little earlier. But that may be more of a function of the weekend. More important to me on crude at 58.40 right now would be how it starts trading after the weekend. And since you're not buying gold to go into a weekend in case something bad happens, normally there's a little bit of buying in crude. And I'm going to have to say that, a very little bit of buying that. But on this day, 1933, we leave the gold standard, never really to return, but at least you can own gold if you wish to, although probably don't wish to right now at the moment, maybe later. I've never been, or let me put it this way, I have not been a big gold bull. and thought maybe a U recovery instead of a V recovery was more likely. I know that has angered some people, but they should know that I have not put money in it, so I have not really driven their stocks up or down. I have not changed the price of gold whatsoever. Just waiting for what I think is going to be a point where we see severe demoralization in gold. And at that point, I think maybe we'll take a look and see whether it's worth diving in at that time. I just, too many people still interested. When I don't hear anything about it for a month or two and everybody kind of thinks that it's no longer important, that's where you want to kind of try to come in there. That or some kind of frightful thing that everybody thinks is making people jump out of windows in New York City. Of course, just about anything would make me jump out of a window in New York City. I'm not a big city kind of guy, kind of a small city kind of guy. But I can't say it. I want to say it, but I can't say it. Anyway, today it was all about the dog that didn't bark in oil. Oil futures traded mostly lower earlier today. And of course, that was on the OPEC coming out and saying that they would do nothing. If you're not familiar with the dog that didn't bark, one of the better, or not, I'm going to say it's the best, book of Sherlock Holmes, where he was introducing a lot of people into something that they didn't know around the turn of the century. And that wasn't this century. It was the one before this, 1900. He was a big to-do about deductive reasoning. And, of course, one of his books was all about how he knew who had killed somebody because the person that killed the person had to come by a dog that was owned by the victim. If the dog would have not known the person, he would have barked. So that by not barking, he knew that it was somebody that the victim had known. And right now, that is it. We got them doing absolutely nothing. And I think we can tell a lot from nothing. In the case of this, they are saying that they will not change output within the next 6 months. And as far as I can tell, we're probably looking at crude prices that reflect that. My basic looking at the crude market suggests that we're probably in some kind of range now, maybe a little lower than we were at, but somewhere between probably $53 and $62, something like that, I think. But we will soldier on. Miss Yellen out here, kind of interesting, is telling people that she cannot fully comply with a congressional subpoena related to the leaking of sensitive central bank meeting information. Fed Chair Janet Yellen saying, according to the Dow Jones, she said because there's an ongoing investigation. Well, she doesn't get to make that determination. So I'm kind of interested in who told her not to give it to him and who is out there. Because if it was some small fry, they'd drop them in the grease right now. They wouldn't care whether or not they told somebody that they're under investigation. You don't have the right, unless you're invoking basically the president's power, to not relate it. So I don't know if she's saying that somehow the president's involved. I doubt it. More likely, she just wants to make sure that Congress does not get involved in anything that they're doing out there. They don't want kind of getting the camel under the tent, let me put it that way, getting the nose under the tent, and maybe the whole camel follows. But kind of interesting to see her tell Congress to go pound salt. I wonder how that's going to be under the next meeting when she has to go in front of them. I suspect that congressman will probably give her both barrels and ask her why she thinks she cannot give them everything. But that's pretty much it for the news. Kind of quiet for a day where we had so many different things going on. Of course, the Greeks really starting to sink in, I think, a great deal about people seeing that they have no intention of backing down. They really can't. And that's part of the guy with the bomb strapped to his chest. Can you really negotiate them with them? And of course, I think that they've played this up and gotten to this point. The EU has kind of pushed them in a corner. and being what they are and knowing that they really don't have much to lose, they decided to up the ante by not saying that they would pay any more cash till the end of the month. Probably good for them, too, because if they would have coughed up that cash now, would have been problematic of running the government. This way, they can run the government and come to some agreement where they don't pay the cash that they said that they were going to pay at the end of the month, no matter what, anyway. But we do have some other stuff. We got a market that's just going sideways out here. I suspect, like I said earlier, that we've got a market that is just going to probably trend like this. We're probably going to have maybe 2 steps forward, 3 steps back, 2 steps forward, 3 steps back. And I suspect that is until we get some kind of interest rate hike in the markets. I have positioned myself accordingly. We in the daily newsletter have been doing fairly well already in shorting the third world out there. And my theory on that is, of course, the United States gets a cold, the third world gets Ebola. And so far, it's been a very, very good trade for us. I am 100% in short now, not only the indexes, but individual stocks and sectors. We have been since on Tuesday. And I don't know if there's a whole lot more to add on that. I just don't think, where a lot of people probably think that the bottom's just going to drop out of this market. I suspect the biggest thing happening right now is Janet Yellen and the band of merry people over at the Treasury and the Euro. It's all about letting the air out of this balloon and bubble as slowly as they can. And my guess is until we get that rate hike, we're going to be under pressure. And they'd probably be better off just ripping the Band-Aid off. That probably by slowing this down, they're actually just going to increase it, the pain over time. That happens. And the psychology of a market that's down just a little bit every month tends to make people in government happy, but tends to set a trend that's hard to break over time. Just like the trend that we had that's been higher, it's very tough to break. The trend out here to go slowly slower out here can lead to disruptions that they have not thought about yet. Normally, letting the market settle quickly is the best medicine, but also the worst politically. And we'll think about Janet Yellen when we come back. But, you know, we're up 1 point on the S&P cash. Not a big deal. My guess is that we're probably going to see more sideways action on Monday, and we're probably going to see more downside action coming on Tuesday. But for the most part, this is a perfect market if you're a big stock operator to slowly sell into the market. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. And now it's time for everybody's favorite segment, Hate Mail. Of course, you can always email me at path@tfnn.com, as Richard has from Ocala, Florida. There's nothing worse than some old, hugely overweight, out-of-touch person repeating the same moronic old phrase each and every day. Lose the I digress. It makes you look and sound like a complete idiot. Well, thanks, Richard in Ocala, for that wonderful email. You can email me, too, at tfnn.com. A path@tfnn.com. You can call up and call me a complete idiot at 877-927-6648. And you can also post a message in the den. But I don't know. I think I digress. And as we get to other stocks of interest in this market, what else do we have? A little bit of action still in some of the China companies that specialize in gambling, but, you know, not getting a lot of follow-through on what probably is a little bit of a short squeeze. You wanted to see whether or not you could get any of a follow-through on when, you know, you can still get back up to maybe 118, something like that, in the market. And what else can you say? It is, you know, you got to about 110 and this thing just run out of gas. Now, maybe we get some more action going back in. Ideally, I wouldn't be pulling the trigger here if you think this is an ABC down. I'd still be looking at $120. And I don't know what else is out there. Anyway, let's look at a few of the stocks that I've been watching today. And they've been up at these highs, and they've been up here with light volume. CommScope Holding Company, COMM is the symbol on this guy. When we look at the profile to find out what they do, It, together with its subsidiaries, provides connectivity and infrastructure solutions for wireless, business enterprise, and residential broadband networks worldwide. I'm wondering if this isn't the target of some kind of buyout, but I haven't dug into this one other than the fact that it is up here with a very light volume compared to the previous high. That actually occurred on March 3rd at $32 at 4.2 million shares. We went over it. We went over it again today. It's just not a lot of volume, kind of tucking back down there. Probably still going to close back over $32. Maybe, maybe not. It's going to be close. But enough of these stocks starting to give a sell signal. And, of course, if you're a fan of Wyckoff trading, that is called proving the point, i.e. going above it or going below it, having lighter volume coming back into the trading range, whether it's a high or a low. And it has proved the point, that is, that you did not find additional sellers out there. The one thing you need to watch, of course, is if that happens right before earnings, generally that may just be a lot of stock manipulation more than a true signal. So you have to watch and make sure that you see whether or not that is possible. Horizon Pharma, PLC, another one up here with very light volume. A little bit of a juice back up here, trying to get back up to these highs. And again, probably the same thing with the IBB. If anybody's going to buy anything with their last cold breath, you're going to have to pull the mouse left button out of their hands to buy the IBB, because that's what they're, before I die, I got to buy the IBB. Anyway, all these pharma and biotech stocks, of course, the ones that people can't spend more than about 5 minutes of a day going through without buying. April 21st, $32.15, 9.9 million shares. You got up to 3 million shares, but we've pulled back in there. Now, what we're doing today, of course, is a light volume push back up to that high. So keep an eye on this. HZNP is the symbol on that. Let's see, what else do we have? Got a request. I am long SSYS at $34. Your opinion, please, technically and fundamentally. Thanks, Brent in Martinez. Don't know where Martinez is. Is that California? Bet that's California. But we will take a look at it. SSYS. Now, here is my fundamental call on something like Stratasys. That is that when you have the kind of price destruction that you've had in Stratasys from $130 down to these levels. In fact, we were short it several times in the, I think, the Tech Insider, maybe even a couple of times in the daily newsletter. Basically, I was thinking that somewhere around the $70, $80 range, you would find at least some support or some movement in it. And I think we tried to actually go long this thing, and it just didn't act right around the $80 level, so we got out. But there was something really wrong, and I didn't know about it at the time, but apparently there was a lot of books that were probably aggressive bookkeeping at the best.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we were talking about SSYS from Brent in Martinez. I think it's California. I think we've talked to him before. One of the things you need to do is you look at a stock that's gone from 130 bucks down to 33 bucks. You're talking about a long and protracted consolidation. This will be a buy most likely when everybody that is in this thing at 80 and 90 and 100 bucks that's still trapped in it are finally given up and they wash out. And normally you'll see this stock, that something that gets quartered, 25% of where it's been, it can take 3, 6, 9 months before that consolidation is done. And I don't think you want to rush it too much. This is not going to be some kind of V bottom out here in these stocks. They are going to have a lot of false breakouts and breakdowns, and this thing's going to go sideways for a while. And then you're going to notice this thing's going to have probably about 10, 15 days where this thing looks like it has zero range, maybe a range of a quarter every day. And you're going to look at that and go, okay, it's doing nothing. It's doing nothing. And what that's going to be is every time it's down there, there is a bid underneath it. Somebody big is accumulating it again. And until we get a great deal of people to come back in and start accumulating it, this is probably not going to go up significantly. If you're talking about playing it for $3 or $4, that is a different issue. You didn't explain how long you were looking at here on this thing. But for the most part, there would be nothing that I would be looking at as a swing trade until we see some kind of true sign of a bottom. And you can either buy it one or two things. One, it breaks out of nowhere with lots of energy. It comes back with light energy, and you get back to this probably $35, $37 range somewhere, and the volume just all dries up. Or the one I particularly like better is it just going sideways for a while, and then you see all the volatility die out. And if you watch it intraday trading, you'll see that people are selling and selling and selling, and the stock doesn't move. There's just somebody sitting underneath there on the bid, taking everything you can, and that is some big fund ready to get back into this market on this stock. Like I said, this does not happen overnight. And the other thing is that you have to wait until complete demoralization for those people in it are just all they want to do is get whatever cash they can back on it. But, you know, when a stock halves, sometimes you get a bounce out of them. When a stock is quartered, you know, if you think that it's going to take 3 months, you probably ought to say that you think it's going to take 6 months to bottom out. And before, you don't have basically a live hand grenade in your hand that could go off any time and even see lower prices. You've got kind of a few days out here that you did see what I was talking about. Let's zoom back in out here with this. And maybe there is somebody out here. What I don't see in here today is any kind of volume, and that would make me think it. But you'll see something like this: 1, 2, 3, 4, 5, 6, 7, 8 days of fairly light volatility for the stock. Now, what you really want to see is something like what we saw yesterday, which is this very light volume day and sideways day, and get maybe 10 or 15 of those maybe at the end of the summer, and we'll see something like that. Anyway, we will continue on. What else did we want to look at? You can email me too, just like David from Martinez, or he's Brent in Martinez. Oh, I'm David. His email has confused me. Brent and Martinez. Anyway, you can always go and do this, but what you're looking at here is a good explanation. We'll look at more of these, and I'll put it on my schedule to check back on regularly. But, you know, between this and DDD, you've got stocks that most likely may have some short covering rallies out here, but there's going to be, you know, a very, very long-term bottom on these. You know, this one was $97. We were short this thing too, back up at the highs. And, you know, to me, this thing broke probably all levels back here about this $28, $29 level that it should have. And that means that, you know, it went back below the real takeoff price that was pre-split was around $30, if I remember right on it. So can you get some movement up and down on this thing? Yes. Is it predictable? For me, it is very tough to see any kind of predictable profits out of something like that. But we will continue on. We talked about the first two on my list today. We're going to get to the third. We got plenty of time, so you can call me at 877-927-6648, or you can post a message in the den. And let's just check in for the S&P real quickly. 2095, it's up half a point, 2.2 billion shares. We've got Land Airlines, LFL, one of these stocks that probably should have found a bottom. It gets close. Let's find out all about these guys. You've got what should be a fairly decent low in this market, and maybe things with the, if we see lower prices in fuel on Monday and Tuesday, maybe this will get going. This is a South American airline, provides domestic and international passenger transport services to 135 destinations in 22 countries. What you have, though, is a 3 million share low at $8.06. You go below it with basically two-thirds the volume. You rally back up, and you come back down here again. This time, yesterday, we had 608,000. Today, we've got 342,000. You'd still want to close back over probably $6.08 on very light volume, but not a bad-looking chart. What I dislike about this is you did have heavy volume back here on the 19th, and that volume basically set up this push back down. But since then, the volume has kind of tailed off, especially since we've gone between these lower lows. So any kind of impotence for maybe South America doing better and or fuel going lower might be a decent trade off of that. Prothena Corporations, PRTA, is the next one I'm going to look at here today. And what do we have? A late-stage clinical biotechnology company focuses on the discovery, development, and commercialization of protein immunotherapy programs for treatment of diseases that involve cell adhesion, and they're out of Ireland. This is another one up here that had a huge spike with monster volume from March 20th at 6.6 million shares. Last couple of days, as we've gone into the top of that, we've seen, 750,000, 700,000 yesterday, and today 360,000. So a few of these probably starting to see a little bit. You need a close back below $45 to confirm that high. But there are a few of these that are still starting to rally, but at this time not seeing the kind of love that they once saw. And we can move on. I got a few more emails here. We'll try to get to them before the end of the show. Rackspace Holdings, we talked about this one a few days ago, and I said, this is one of the few that's out here coming back and testing its gap. That gap was on the 11th of November with 13 million shares. Came into it with half that yesterday, on the 2nd, of June, and 6.5 million shares. So, a good 50% lower. You did have a little bounce, but now you're getting a couple pullbacks. What you would really like to see if you were bullish on this is maybe the market pull back, this thing get to about $38 and continue to see very light volume. At least the chart would look fairly good. The problem you have is this overhang, and that is that $46 top where this thing gapped down on monster volume. And that means that if you go to 38, maybe you get to 46, but you'd want to be out of it by then. There's going to be a ton of people willing to take any amount of cash above $46 if they ever get the opportunity to get that back. Simon Property Group, we talked about this one yesterday, and also kind of an interesting day out here for this one. SPG, 175.36 is the November 19th low with 2 million shares. We pierced that today, went down to 175.43. Still have not totally broken that low, which I think we probably will before this thing gives a better signal. But certainly today, not bad. We went down there. We're only doing about half that volume, a little under 1 million shares so far today. I do like this one, though. If you want to talk about volume shrinking on these legs down, you had an ABC that started on April 6th at $202.28, got down to $180, did its little dance on the catwalk, up here to May 8th. And we saw that to 189.26, came back down, and the energies really kind of come out. He had kind of a sideways day out here that was a little down on the 29th of May. But other than that, volume kind of tapering off down here. And maybe this thing is ready to consolidate a little bit before we get any further. Whole Foods Market, another one back down here. And you wanted to see volume tap out. It's fully filled its gap if you were thinking that you wanted to have this. But unfortunately, this is yet another one that has a high volume down day that we are now under. Of course, this thing gapped up on earnings back on the 6th of November of last year with 27.5 million shares, but it gapped down hard on 31.5 million shares back here on the 7th of May, where it went sideways for a while, finished filling this gap. A lot of these stocks that we've talked about over the last couple of weeks that have gapped down on volume are kind of following a similar pattern on this. They aren't just going back and filling the gap. They are coming back and filling the gap lower that was out here. WPC is the last on this list for me today. And just, I don't know if there's a lot in this chart. Let's go to some other ones already in the market. Yeah, it is Martinez, California. Brent checks in. What else do we have? Thanks, everybody, for all the titles of these emails today. for letting me know it's an on-hate email. Apparently, several people had the same idea. Digress a bit on Harmony Gold, please. Can it make 60 cents? 1-to-1. HMY. We'll take a quick look at this one. And happy connecting. Doesn't say who it's from. Scott. Oh, it does say Scott in sunny San Francisco. We've got a nice low out here breaking through. You know, what you wanted to see is volume of about 6.4 million shares from that $1.53 low of November 11th when it broke through it. Basically, what did you have that day? You had 3.3. Have you had anything that looks like 6.6 out here? Could it make a 1-to-1? You know, this one's hard. You know, you want to see some volume. Basically, you had 2 million shares yesterday. The question is whether or not this thing is going to make it all the way down there. And my guess is that you would probably see a bounce back up to 153, maybe in that range, and all the volume's going to fall out. Then the thing could probably continue that ABC down. I see what you're talking about, Scott in sunny San Francisco. And he's talking about this bigger move. If you want to, let me clean this up a little bit so everybody can see at home. The larger ABC that he thinks is in this, maybe, and that is the A point being February 3rd at $3.18. The February 16th low at $1.67 is your B point. Your C point is April 28th at $211.24. You only did about a 30% retrace before this thing came back down. I was looking at it. I think we even brought this up. I think maybe I brought it up on the show or to Tom. I said, you know, my scan showed this thing up, and it is breaking the low on lighter volume. But what you always need, like I said, is for it to close back into that trading range, and it never did. And that's where these things kind of drip, drip, drip all the way down. Maybe you never get any kind of volume, but this is, when I talk about complete demoralization, this is the kind of pattern that does that. I see his ABC 1-to-1 would take you to 60 cents. Now, if you had incredibly light volume all the way, this is the kind of pattern that does set up some kind of V bottom a lot of times, and that is you going all the way down to that low. You never get any volume, and everybody's been washed out in the stock. Right now, I would suspect that you get some kind of bounce. It goes sideways for a little while and then heads back down. You've got some nice trend lines here. My guess is that the trading in this just gets choppier, if that's a good explanation. But you can email me back if you've got any questions. We're going to go into break. So I should have time for Scott in sunny San Francisco to take a look at it. Financials, XLF have been holding up very well. Also, the more riskier part of the market is holding up well, too. What is typical for a market ready to tank? In the past, I've only seen markets tank when these two sectors are not leading, but they are yet. Your thoughts? Maybe the market tumble is not ready yet. Jamie in Green Bay. We'll look at that when we come back. Jamie in Green Bay with the non-hate email. In fact, he did not discuss my weight whatsoever. So thank you, Jamie. We'll be back in a minute to talk about those things.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Jamie from Green Bay basically wanted to know about the XLF and some of these other stocks and whether they're doing anything. And I'm just thinking that we're fairly close. In fact, I showed in my newsletter either today or yesterday, I think yesterday, when we were talking about financials. What is it? The BAC, Bank of America, is that right? It's got a pretty nice and big Gartley pattern set up out here. And I was waiting for this thing to get back up. We may just see another tick back up in this, but it's got everything you want in a Gartley pattern. Maybe the C to D is a little bit long in the tooth out here, but I'm thinking you get one more tick back up in these, and you're probably going to see the end of it. The energy off this low from 1525 in BAC is, it's a good-looking Gartley pattern out here. So I would not be surprised to see, you're basically talking at the D target, what, 17 cents higher than the high today? So could you see even this thing maybe pop open to that on Monday? Yeah, maybe. But it's hard for me to get too wound up about the XLFs being strong here. As far as I'm looking, banks like Bank of America are weak. They are just in a counter trend move out here. Let's just take a quick look at the XLF real quick and see if we've got anything else out here. You're right back up to resistance. You kind of pulled off of it. You did it with about the same volume. So could you get back up to $25 on it? Like I said, would it be a big deal if these things popped and everything else didn't? You get light volume on Monday, and then that's it. I think a good scenario out there that you could see the XLF go a little higher on Monday as people pile into that, and the IBB and other things like that without that much happening. So that's it. They're hanging up here. You know, to me, all I see all day long is some very sharp buying and then selling for the next 3 hours. And that's been kind of the pattern for the last week. So to me, can the operators in the stock market keep this market up a little bit? But then, of course, by the end of the day, you get a little aggressive in the selling, and then we see the market's down by the end of the day. I mean, we've seen that for, 7 days, 8 days now? We've seen them pile into the S&P futures short, selling into it. So to me, we're just going to have days like this where we do nothing. We're going to have days where we're up a little bit. We're going to have days when we're down a little bit. It's just going to be, we're going to have days where we're down a little bit more, a few more than we have on the upside. And by the end of the summer, we're probably down 200 points on the S&P cash until they decide to raise rates. Now, we may have some air pockets along the way. I think we've got a meeting next week for the Fed. We've got some other stuff, and it's going to be very hard for them to say that they haven't found the numbers that they like. And everybody knows it. Everybody knows this morning that the 280,000 job numbers basically says that they need to raise rates sooner rather than later. And, of course, they really can't do it in 2016 because of the election. They basically, after getting their hands slapped vigorously in 1992 by doing this right before the election and basically stalling the economy, and some people think almost deciding the election of 1992, they've been basically told to keep their hands out of the cookie jar during the election year. And so if we're going to see any kind of movement at all from these guys, they got to do it this year. At least that's my call on it. 28.94 in the S&P cash. We've got Tom O'Brien for the next 2 hours. I'll be in the 4 o'clock hour. We've got lots of technology to talk about then. So hang on. Sell when you can, not when you have to. And we'll see you same time, same bat channel on Monday. Channel 14, Tiger TV.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.